Indian healthcare operator Fortis is going big on Asia, hoping to tap the region's rising urbanisation and ageing population. The company is merging its Indian and international operations, enabling it to offer a wider array of medical services. But the consolidation has come at a cost, forcing Fortis to delay its $400 million Singapore IPO to the first quarter of next year. Joining us for a first on CNBC interview, Malvinder Singh, Group Chairman of Fortis Healthcare. He is in Singapore to speak at the Global Entropolis Singapore 2011 conference, chatting to Adam and I here on Cash Flow. Really good to have you with us today. Thank you so much for taking the time to speak to us today, Malvinder. I wanted to ask you about the shelving plans for certainly the postponement of the Singapore IPO, which has been postponed to the next quarter. Obviously, in previous statements that you've made, you talked about the consolidation, was part of the reason. Just how much of the reason is because of the volatility and the weakness and the uncertainty that we're seeing in global markets?
Firstly, we've never really made a comment about deferring an IPO or linking it to the consolidation. But I think what's more important here is to have the Indian business and our Asian healthcare business come together under one entity, where today we really create the leading healthcare company in Asia, including Australia. And when you look at it, we today have $1 billion US in our healthcare services revenues. I think this sets us increasingly well for a substantial amount of growth in many of these markets. So as a business, I think it's a real strength in terms of combining the two entities to create a very strong healthcare player in probably the fastest growing healthcare markets in the world.
Was the delay in the IPO then, did it have anything to do with this consolidation plan?
In terms of an IPO, the Indian company is listed. We're actually putting everything together where the Indian company becomes a listed company. And I think really moving into the future, we will continue to explore the appropriate capital raising plans across multiple businesses that we have within the healthcare space.
Malvinder, if you do go back to the market to raise more money, even in Singapore, if you count the profits that you made from the sale of Parkway Health to Khazanah, and you put it two together, you'll be amassing quite a substantial firepower. What might you be doing with that cash exactly? I mean, are you looking at more growth opportunities within this region particularly? And without names, maybe which countries could you give us?
What we've done over the last 10-12 months since we exited our investment in Parkway, we've gone out and we've created an international business headquartered out of Singapore. And over the last 10-odd months, we made 7 acquisitions in the region, within Asia and in Australia. So we are very clear and very focused on expanding our healthcare businesses in India, in Asia and in Australia. These are the focus markets. Today we are there in 10 markets. The international business over the last 10 months has become $500 million, which is the same size of the Indian business. So at a run rate, we're sitting at $1 billion today, and we are growing at a very, very fast pace.
If you look at the sector in general, a lot has changed, at least with the global economy in the past 6 months. If you're looking for further acquisitions out there, how competitive must you be in terms of bidding? Because, last year was certainly a big fight for Parkway Health. And have those conditions changed at all? Are there more deals on the table that can be had, and the pricing looking a lot more attractive with the economy where it is? Or is healthcare recession-proof?
I think when it comes to Parkway, we did what was best for Fortis last year. And moving forward, I think we've been very aggressive in making acquisitions and strategic ones in key markets. And we've picked up some very strong, good assets in the markets that we've entered. So we are a leader in the primary healthcare market in India. We are the leader in the dental business in Australia and New Zealand. We are a leader in the business that we've acquired in Vietnam, which is at mid-level in terms of the hospital chains, and also the leading position in Sri Lanka. So going into the future, I clearly see continued opportunities. In some markets, the markets are fragmented, they are still evolving, and therefore acquisitions would be a preferred route for a market entry into some of the markets where we are not. At the same point, in the markets that we've already entered, we will continue to use organic growth and bolt-on acquisitions to further move up in the vertical value chain within the healthcare space. So as we've done over the last many months, our focus is to be an international integrated healthcare delivery services player. So international is something we already are, and we are continuing to focus on that. But more important is the focus on an integrated healthcare play, which enables us to look at different sectors and segments within the healthcare space. And that, I think, is unique to Fortis. There's a huge opportunity, and we are focusing on building that capability.
Malvinder, where is that growth specifically? I mean, you are talking about and indicating that there are a number of opportunities for you on the international scale right now. Where specifically is the growth going to come from going forward?
Well, let me give you an example about some of the existing markets where we are. If you look at India, the Indian GDP is growing, say, around 7%. The healthcare sector in India is growing 2 times that, and we as Fortis are growing 4 times the GDP in India. So there's tremendous growth for us sitting in that market. If I look at the Hong Kong acquisition, which we made close to a year ago, that has grown very, very successfully at the top line and at the bottom line. If I look at our acquisition in Australia, we are growing at a phenomenal pace in that market. So I certainly see opportunity for us to leverage our capabilities, enter markets, enter segments within healthcare, and being able to add substantial value in terms of servicing patients, creating healthcare capability and infrastructure, and creating economic value for our stakeholders.
Okay. All right, Malvinder, really good to have you with us today. Thank you so much for chatting to us. It's an interesting story, and we will continue to follow it and, of course, the company.